Many Bitcoin investors thought that institutional buying would send BTC into a super cycle with massive upside. Yet the past few months haven't really turned out this way. Let's see how companies are changing the Bitcoin economy and if it's actually as bullish as everyone had hoped for. Today we're going to be looking at how institutions are changing the Bitcoin economy, and where better to start than two new charts we have here on bitcoinmagazinepro.com. The Treasury Tree Maps chart we have here, which is looking at the amount of BTC held by companies within both the US, Canada, and the rest of the world. Obviously, MicroStrategy have quite a lot of BTC, and then going from there, Marathon Digital, Galaxy Digital, Tesla, for example, and all the way into Canada, we can see Hut 8 and Hive have huge amounts of BTC holdings, and in the rest of the world, we can see Nexon in Japan, Phoenix Digital Assets in the UK, etc. So we can now actually track in real time how much accumulation or distribution is happening by the world's biggest Bitcoin holding companies. And if we just go to the next chart we have here, this is actually giving us a little bit more insight and a little bit more data onto these specifics, such as the amount of BTC they have and how much that actually equates to in US dollar terms, as well as the percentage of the amount of Bitcoin they own. So MicroStrategy actually have over 1% of the Bitcoin total supply, which is an absolutely monumental amount of BTC, especially considering we have over 1 million Bitcoins left to be mined. They already own over 1% of that theoretical max limit. And as we can just scroll down here, we can get a little bit of an in-depth look into all of these. So I actually did the maths. I calculated how much all of this actually adds up to. So these companies are actually holding 342,463 Bitcoins, which has been accumulated over the past few years. But obviously, one of the major institutional inflows we've seen over the past few months has been the Bitcoin ETFs. Since their launch, we've seen hundreds of millions, billions of dollars poured into these ETFs to accumulate BTC on an institutional scale. So this has actually accumulated a huge amount of Bitcoin. Over the past few months, though, this has kind of decreased a little bit. In terms of their assets under management in US dollar terms, this has actually been a bit lower than it has been since their peak a few months ago, but they have still slowly been accumulating BTC up to the amount of 918,210 Bitcoin. So between the private companies we can see here and the Bitcoin ETFs, we have 1,242,673 Bitcoin held by these players. And if we just go into the Bitcoin hodl waves here, we can actually calculate that the amount of circulating supply that 1.2 million Bitcoin is about 6.29% of all circulating supply of BTC, which is especially monumental considering the Bitcoin ETFs have only been around for 7 months or so. So it's a huge amount of BTC that's been accumulated, especially if we remove all of these hodl waves except the 6 months plus, which is currently sitting at around 75% of Bitcoin that hasn't been moved in the past 6 months. So especially if you consider the amount of BTC that's been accumulated by these large institutional players just in the last few months, about 6.29%. And then considering about only 25% of all circulating Bitcoin is actually liquid and moving on a biannual basis, we can say that they probably have about a 25% influence on the circulating amount of BTC. And if we go to something like the long and short-term holders chart we have here, we can see if we look at something like the previous cycle, the amount of Bitcoin that was transferred from long-term holders to short-term holders started at around 14.28 million, all the way down to about 12.1 million. So this is only about 2.3 million BTC that changed from long-term holders to short-term holders. And considering the amount of Bitcoin held by these institutions is about 1.2 million, they could have a huge impact on the overall price of BTC if they either hopefully decide to continue accumulating or potentially start offloading some of their BTC. And we need to consider, just because they hold 6.29% of the supply, if they were to sell 6.29% of the Bitcoin supply, it would actually have a much more monumental impact on the Bitcoin price. It's something called the money multiplier effect, and we have discussed this on the channel previously. But very simply, if you assume an asset with 100% of its circulating supply in circulation, then the amount of dollars going into that market would likely increase the market cap by $1. But if you decrease the active supply by about 50%, you'd assume that $1 going into the market would actually increase the market cap by about $2. Its money multiplier effect would equal about 2x. So even though the calculations on this can vary a little bit, if we just assume that 3/4 of the Bitcoin supply is not active, we assume that only 25% is actually freely moving and liquid, then we can say that maybe the money multiplier effect is at least a 4x. So this 6.29% could very quickly have an influence on over 25% of the Bitcoin price action. Now, if the money multiplier effect was, say, 8x, which is a bit close to what we've calculated here in the past, then they could theoretically sell their BTC and have a 50% negative impact on price action pretty much immediately, which is a monumental impact on the Bitcoin economics. Now, if they were instead to buy BTC, this would likely have a little bit more of a positive impact on the Bitcoin price action. If we just go to the Bitcoin price live chart we have here, we can see that since January 11th, when the Bitcoin ETFs were approved, price was around $46,000, $45,000, $47,000 around there. And obviously we dipped slightly afterwards in more of a buy the rumor, sell the news type event. But very quickly, in the coming 2 months practically, we increased about 60%. Now, if these corporations and institutions were to accumulate the same amount of BTC in the next 6 or 12 months as they have done in the previous 6 or 12 months, then we're going to see a huge positive impact on the Bitcoin price action, especially as there is the assumption that these institutional players aren't going to sell their long-term buyers who are going to hold BTC for many years, if not decades. Then we're going to continue to see that circulating supply of BTC continuing to decrease. So the amount of actual inflows required to pump Bitcoin price up by 2, 3, 5, 10x actually reduces significantly. So it can obviously go both ways. Now, we would prefer if it was accumulation as opposed to distribution, but it is something we need to monitor closely to see if we are seeing more inflows or outflows from these private companies and ETFs to maybe get a little bit of insight into how they're expecting the Bitcoin price to move forward. Also, if you haven't already, please don't forget to like this video, subscribe to the channel and turn on notifications to ensure you're receiving all of our content as soon as it's released. And make sure to check out all the resources we've discussed today, as well as the many more that are all available on BitcoinMagazinePro.com, your number one source for Bitcoin analysis. So just to summarize, companies around the world have accumulated hundreds of thousands of Bitcoin over the last few years. And since the launch of the Bitcoin ETFs, we've seen institutions scoop up nearly 1 million coins in just a few months. So between these private company treasuries and the Bitcoin ETFs, it's about 1.24, 1.25. It's always increasing million Bitcoins that are currently under the control of these larger institutional players, which is around 6.3% of all circulating Bitcoin just held by these alone. And considering only around 25% of the supply is liquid and moving every 6 months or so, this amount of BTC being moved could have a huge influence on the Bitcoin price action. And if we do see more accumulation over the next few months like we've seen since the launch of these, then it will likely compound this bullish momentum, decreasing the liquid supply even further, assuming they're long-term holders, and massively impacting the Bitcoin price in a much more positive way. However, we do need to acknowledge that if they do start offloading some of their positions, selling some of their BTC holdings, then this could have a massive bearish impact on the Bitcoin price action, especially considering the money multiplier effect, which is at least 4, if not 8 or higher times the amount of impact on the market cap than the amount of capital inflows or outflows. Then we could see a double-digit percentage decrease in a very short space of time if we do see some large offloadings from these holders. If you like this video, then please visit BitcoinMagazinePro.com, where our analytics help you to cut through the noise to make informed, data-driven decisions about Bitcoin. With over 150 live charts, personalized indicator alerts, in-depth crypto industry reports, API access, and more, all for a fraction of the standard industry price. And let me know what your thoughts are on how the Bitcoin economy has changed since these large institutional inflows. Do you think it's a bullish thing for Bitcoin in the long term, or do you potentially think these institutions having a larger influence over Bitcoin is actually a bearish thing? Let me know in the comments below and on social media. I look forward to reading and replying to all of them. Thank you all very much for watching, and I'll see you in the next one.